All right, as we've been talking about, Home Depot reporting earnings this morning. The company missed on the bottom line, but did show improvement in their U.S. comps over the last 3 months, every month of the quarter. Joining us right now for his reaction is Brian Nagel. He is Oppenheimer's senior equity research analyst. And Brian, just tell me what you think about what you saw from this release.
Well, good morning, Becky. Look, I think it's largely more of the same from Home Depot. I know we've been talking about this for a very long time now. But Home Depot is managing well. This is a very well-run company in a very solid sector. But what's lacking here is that sales momentum. And I don't think that happens. I don't think we get sales momentum at Home Depot or through the home improvement channel until we get rates more accommodative. But when I look at this quarter, it's more the same. You're right. What they're talking about is sales getting a bit better, sales growth getting a bit better as the fiscal quarter progressed. I think that's a lot of weather. What we saw is the weather turned more summer-like as the quarter progressed. So I think Home Depot probably benefited there, but you're still really lacking that true sales momentum.
So for Home Depot and for Lowe's, I know you think both companies are well run. If some of this is out of their control and it has to do with the rate structure, A, do you think we're going to get a cut in rates soon? And B, if we do, would you buy these stocks?
Well, look, that's the big question. So I'm going to be watching, very closely your next segment when Secretary Bessent is on and maybe some hints there of rates. Look, my personal view is yes, rates will move lower. The timing of that move, I think, is still questionable. I personally believe that we're running above neutral. That's not necessarily my job to make that forecast, but I do believe that. But probably, the point to really answer your question, is covering Home Depot and knowing Home Depot very well. Yes, I very much believe, that as rates move lower, as mortgage rates become, so to say, more affordable, that you're going to see a sales reacceleration at Home Depot. And frankly, the longer this dynamic, this stagnation in the U.S. housing market persists, the more pent-up demand builds. So again, as we get rates moving lower, still questionable when that happens. I think you're really going to see a resurgence. And that's the time. That's when you want to really own Home Depot. Now, I talk to our clients every day. There are clients that are positioned ahead of that. My advice is to wait on the sidelines a bit longer. But I do think I do think that will be a big positive for Home Depot and the home improvement space.
Richard McPhail, the CFO there, just in my conversation with him, said that they see a healthy consumer. They've been talking to the pros who use them, and they are still seeing delays, people putting off really big renovations, but they're not canceling them just yet. They think they're waiting for lower rates as well. How much of a move do you think you'd have to see? Is it 50 basis points? Is it more than that before some of those projects would actually come to fruition?
Yeah, it's okay. It's a good question. So, the 30-year fixed mortgage rate right now is just roughly 6.5. We talked a lot. The way that, like you're talking about the rate structure in the United States. If someone has a mortgage right now, that mortgage is probably at 3%. So you've got to get that 6.5 closer to 3. Now, we're not getting to 3. That's not going to happen. But I think, again, this is somewhat of a guess, but I think we start seeing a 5 handle on that 30-year fixed mortgage rate, something close to 5. I think there will be a big unlock dynamic there. Now, that's mortgage rates. That gets housing moving. The other piece of this on the shorter end of the curve is the HELOC rate. And so the typical dynamic is, there's a lot of equity out there, historic equity right now in homes. We want homeowners to start pulling that equity out to basically fund these bigger remodel projects, the bathrooms, the kitchens, the decks, whatever. So there we're probably, as the Fed moves, we'll probably see that happen quicker. And you can start to see that would really help to fuel that remodeling demand.
So between the two, we're going to hear from Lowe's later this week. Which do you prefer? I know you think both companies are well run. How does valuation play into this? How does performance? How does, who has the better relationship with pros? How do you kind of figure out between the two of them if you can only buy one?
Yeah, look, I'm simple. I think the better investment play here is Lowe's. I do. And I say that for really 2 reasons. One, there's still more operational slack in that business model. For years, Lowe's was mismanaged. Today, under new management, the company is much, much better run. And they're basically, their operations are now very close to Home Depot, but there's still a little more slack there. So I think that's a positive. The second is, despite all the improvements that have happened at Lowe's, the valuation gap between Lowe's and Home Depot has remained very wide. So I think that's a long-winded way of saying Lowe's is cheap. So I think Lowe's is the better investment play. Home Depot is still the better company. They're making better moves, bigger moves in that complex pro, that big pro business. They're ahead of Lowe's there. I think that could be attractive long term. But right now, if I'm owning one stock, I'd own Lowe's.